Listen up. I'm going to tell you a hard truth. Most people will never build real wealth. It's not because they aren't smart enough. It's not because they don't work hard enough. Nobody ever gave them the playbook. That ends today, right here, right now. You're going to stop guessing and start winning. The stock market isn't an exclusive club. It's the most powerful wealth-building machine ever created. And I'm going to hand you the keys. This isn't going to be complicated. I don't do complicated. I do action. I do results. We will break it down into 5 simple, powerful concepts. First, demystify the stock market. Second, open your first brokerage account. Third, stocks, ETFs, and index funds, what they are and when to use them. Fourth, the magic of compound interest. Fifth, the rookie mistakes to avoid and how to sidestep them. Let's get one thing straight. The stock market is not a casino. It's a marketplace, the biggest, most dynamic on the planet. Companies need money to grow, innovate, and hire. To get it, they sell tiny pieces of themselves. Those pieces are called stocks, or shares. When you buy a stock, you become an owner. You own a slice of that business. When the company does well, makes more money, or invents the next big thing, your slice becomes more valuable. If people pay more than you did, that's a capital gain. Sometimes companies share profits directly. That's a dividend, a paycheck for owners. Trades happen on exchanges, but you don't fly to New York anymore. The market is in your pocket, on your computer. You access it through a brokerage, a company that connects you to the market. Prices move all day as millions buy and sell, a tug-of-war of supply and demand. Optimism and pessimism collide. Don't get caught up in daily noise. That's for amateurs. Professionals understand the long game. Over time, markets have always gone up. Because humanity innovates. Economies grow. Good companies make more money. Your job is to own pieces of the best companies and let them work for you. Think in decades, 10, 20, 30 years. That's the path. That's the strategy. Now you know the arena you're playing in. All right, enough talk. It's time for action. You can't win if you're not on the field. That means opening a brokerage account, your gateway to the market. Stop thinking it's hard. It's not. It's straightforward. Pick a reliable brokerage, long track record, low fees, and an easy-to-use platform. Many offer zero-commission trades. Use that revolution. Sign up. It's just online paperwork. About 10 minutes. Have your basics ready. Your name, address, date of birth, and social security number or tax ID. It's standard for taxes and identity. These firms are highly regulated. Secure like opening a bank account. Next, fund the account. Link your checking to your brokerage to move money in and out. Start with an amount you're comfortable with. $100, $50. The point is to get started. Make that first transfer. Prove to yourself you can do this. You're officially in the game. Log in, click around, find the trade button, check your balance, and use search to find companies or tickers. If available, try paper trading to practice with fake money and build confidence. Take an hour. Explore. Your financial future starts here. Yeah. Just do it. Your account is open and funded. Now what? What do you actually buy? It's simple when you know your options. 3 main tools: individual stocks, ETFs, and index funds. Each has a purpose. No jargon, just the facts. An individual stock is one company. Pick right and returns can be explosive, but risk cuts both ways. One stumble can wipe you out. For beginners, betting on 1 or 2 names is gambling. We don't gamble, we strategize. An ETF is a basket of stocks you trade like a share, a pre-filled shopping cart for instant diversification. Diversification means not putting all your eggs in one basket. It's the best way to reduce risk. The king for beginners is the index fund. It doesn't try to pick winners. It simply buys all the stocks in a major index, like the S&P 500. You own small pieces of hundreds of leading companies, effectively a bet on the entire American economy. Historically, a winning bet. For most starters, a low-cost broad market index fund is smart, safe, effective. So yeah, start there. Build your core with diversification, then add carefully if you choose. The most powerful force in the investing universe: Compound interest. The money machine. Your money earns a return. Next year, you earn on your money. And on last year's return, it starts slow. Then it snowballs. Bigger, faster, unstoppable. Say you're 25. Invest $300 a month in a simple S&P 500 index fund, about 10% average historically. You do it consistently and let it grow. You invested $144,000 over 40 years, but compounding can turn it into over $1.5 million. Not a typo. The two key ingredients: time and consistency. The earlier you start, the better. Waiting costs your future self hundreds of thousands of dollars. Set automatic monthly investments. Pay yourself first. Let compounding do the heavy lifting. It's the laziest way to get rich I've ever seen. Start today. Your future wealth depends on it. Every year, new investors get crushed by the same mistakes. These are preventable. Study the opponent's moves, avoid the traps, and march to victory. Number 1. Trying to time the market. Guess the top, guess the bottom, sell on bad news. Buy when euphoric. Nobody does this well over time. Nobody. Not me, not you, not Wall Street. Winning is time in the market, not timing the market. Number 2. Falling in love with a story. Hot stock on social, world-changing pitch. Emotional investing is a recipe for disaster. Separate emotions from money. Don't chase hype or crowds. Stick to your plan. Buy quality and diversification. If you speculate, use a tiny amount you can lose. Your core portfolio is sacred. The market will go down. Recessions, corrections, ugly days. It's part of the cycle. Amateurs sell bottoms. Pros see sales. Opportunities to buy great companies cheaper. Hidden enemy: fees. 1% sounds small. Over decades, it can eat a third of gains. This is why we love low-cost index funds and ETFs. Always check the expense ratio. We've built your foundation. You know the market, how to open an account, what to buy, the power of compounding, and the traps to avoid. The choice is yours. Sit on the sidelines, or take one small, simple step today. Open the account. Make the transfer. Buy that first share of a broad index fund. Wealth is a marathon. Be disciplined. Be patient. Stay the course. Subscribe to Smart Stream for weekly investing insights. Turn on notifications. You don't want to miss what's coming next.